Good morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, Dimitri comes on. Please take a look at the disclaimer. Neither Dimitri, myself, or Market Chameleon are registered investment advisors. This show is for informational purposes only. So please take a look at the disclaimer again. With that, D, you ready to get started, buddy?
Yeah, let me share my screen real quick. Quick note for those of you joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into the live chat on YouTube. Will's watching it and he'll read them back to me. And to give you a couple minutes to put those questions in, we'll start out taking a look at the pre-market report, see if we can get insights, what's going on in pre-market hours, and then we'll move on to the questions. So in this pre-market report, up top, we have this calendar view. It does allow you to go back to a historical date if you wish to look what happened in the pre-market hours on a particular date. This view up here shows you for the last week from a high level what happened in the pre-market hours. So if you happen to spot anything unusual that happened recently or a trend, you can do that from this view up top. Today, we're on February 28th. So far, it is shown 479 stocks are trading higher in the pre-market and 497 stocks trading lower. We have 170 million shares trading on up volume versus 67 million shares trading on down volume. If we convert the volume to the dollar value of the shares, we have $1.9 billion worth of stock trading higher, $3.3 billion worth of stock trading lower. So from that perspective, looks like a little bit of a mixed bag, perhaps a slight bearish lean in a pre-market trading. So let's take a look at it from a couple more perspectives, then we'll move on to the questions. I'm going to scroll down the page. Now we see a list of stock symbols with price changes and volume and alerts that are trading in the pre-market hours. We have a list of our most active stocks, our biggest percentage gainers and biggest percentage decliners. And there are 78 stocks that made our percentage gainers list. 97 are on our largest percentage decliners list. So that also points to a slightly negative lean or bias in the pre-market trading. Now, a couple things about this list. We do set thresholds because stocks in the pre-market hours tend to trade with either less volume or less liquidity. So we do set certain thresholds to make it on this list. But if the stock is listed on a major US exchange and meets those thresholds, it could still make it onto this list. And that includes small cap stocks. You can see here the market caps. Some of them are small cap stocks. It could be an ETF. It could be a leveraged product or an inverse ETF. Could be a closed-end fund preferred. So to narrow it down to a small group of stocks, we could start using the filters above. And if you have a watch list and you save your watch list and you follow a certain group, you can filter this report by your watch list. We're going to use this filter here in ETF, for example. When I click on it, you get to choose from a list of different ETFs. And we're going to choose this one, SPY. That's the S&P 500 ETF. And when you click on it, the list below gets filtered by stocks that are holdings in the SPY ETF and trading in the pre-market hours. So these are the S&P 500 constituents. And here we see 4 stocks made it onto our biggest percentage gainers list, 6 on our biggest percentage decliners list. So that also indicates a slight bearish bias at the open. We gave it a couple minutes. Well, I'll take some questions now, but I do want to mention I think I'm going to try to finish a little bit earlier today, because I got an appointment right after the show. So we'll see how the questions go.
All right. Well, we got a couple quick questions. First, Rick is thanking you for explaining the compare payout diagram yesterday. I have a question in regards to a sign price area when saving a strategy.
Okay.
He goes on to say, if I enter a trade and then put in the actual entry prices and then save the strategy, when I reopen the save strategy, it appears that the sign prices I put in get changed to actual current price. Is there a way of saving the prices from point of entry in order to monitor it? And that may be a bug that we have to look at.
I think I'll take a look at maybe if
it might take a screenshot and send it over, support@MarketChameleon.com. That would be super helpful, Rick.
Yeah, and I'll take a look at it just because that does seem less of a functionality, more like a either feature request or bug. So I'll take a look at it, but I don't want to spend 15 minutes.
No, we'll take a look at
that one. Yep.
The other question was from Rob. I just noticed a tool that I have not used before under options tab. It is called strategy payout. Perhaps Dimitri could discuss.
Yes. Okay. I see right here. So this here is really it's like the options profit calculator. And this was actually our earlier design. I might actually take this tool and retire it. And the idea behind this tool is the same thing you could do from the options chain. So if you just wish to, put in, it's like go to March 6th expiration, pick some call and create a strategy in here, long call here, long put, and just draw the diagram. So this will draw you a diagram of the straddle. So it's really the same idea that we have and we talked about yesterday from the options chain. The options chain is much more powerful. This tool actually existed a much earlier than we developed it on the options chain. And the reason we just did it on the options chain is just easier to set up this calculator. So instead of going through these expirations and picking calls and puts, you could just do it all from the options chain. In other words, I could go March 6th, and instead of drop down selections, I could just go here, find the call I'm interested in. So like here, let's just say it was the 507, wherever 507 call. I could click on it and it pops up buy ticket. If I want to put, I click on an offer there, pops up a buy ticket for the put, and then you could just run it and you'll get that diagram. Here, we just packed it with much more powerful punch because you have theoretical values. And by the way, we're going to probably change this as well, at least not the functionality, but the display of it to make it a little bit easier to understand and grasp, because even as I'm looking at it, there's a lot of features on here floating around, and I think we could consolidate it a little bit just to make it more user friendly. So there's a lot going on here. It's very powerful, but it's not, as we developed it, it's not as user friendly. So probably be more of a design change, so we could keep enhancing it. But I'm actually going to be doing a webinar on this option profit calculator with our next IBKR webinar. So I'm not going to talk about it too much today. especially, we talked about it yesterday. We'll be doing a webinar, and I think we'll change the display here. Hopefully you guys like it, and it makes it just easier to use, right? Because there are a lot of functionalities here, but it's not very obvious.
Robert did mention, he says, I think it is helpful because it is very simple and easy to work with. The calculator is more powerful, more time to use.
There's a lot more happening on this calculator here with theoretical values and we're gonna change this around a little bit. It's takes some work, but I think that the final version, the idea is that it'll just be a little bit more I don't know, UI friendly, let's say. All right. Any other questions, Will?
Mike is looking at RCL. I don't know if it's earnings. I was trying to get, he said he was looking for an April 5th credit put spread. I don't know if you want to price one on that calculator real quick.
So in here's does he have one in particular?
He didn't send the strikes over.
All right, well, let's see if we had any in the trade ideas section here. So I'm going to go to trade ideas section, and
I haven't looked at RCL in a while. Boy, it's come all the way back.
Yeah. So what is credit put spread?
Yeah.
All right. So here's a bull put spread, credit put spread. Let's just see. So there was one that popped up here from a scan. So it looks like the 130, 125 put spread. This is a Friday, since Friday's close. And it looks like that in the market is if you did it right on the market, aggressively, you'd get a credit of 305. Theoretically, we saw it was historically using the historical return distribution to $2.75. So there, the initial benchmark, it's above our initial benchmark, right? 275, which indicates a 15%, 15.5% edge. And it looks like, this spread here based on this price and similar circumstances historically is a 50% winner based on the historical return distributions. Okay. So I'm just going to click on this on the options chain. We're going to go to it. So here we are, 18 trading days, 24 calendar days, and it populated the spread, the 130, 125. And I hit calculate. So here's a couple things. This is what it looks like at expiration. So this is based on March 22nd expiration. Obviously, there's some time to go here, a month, almost a month. This is what it looks like. So if it drops and you have to buy, below your low strike and got to buy back, if you sell it at, and keep in mind here, this is a very wide market here, right? So you as a trader, you really want to be careful not hitting, I wouldn't go hitting that bit, but you have the stats in front of you, right? So the midpoint's 370. This calculates it based off the worst price, right, in the market. Like, so if you hit the bid. So what this is showing us is a couple important things. One is the payout diagram, right? What it looks like at expiration. So you stand to make 305 if the stock stays above 130 and rallies higher, versus losing 195 if the stock collapses, all right, below 125. And then quickly, it's showing us two benchmarks, what we think it might, what theoretically it's worth using historical data, right? So one is this 275, which is using the historical return distributions, saying like based on how the stock behaved historically, given the same time span, same kind of situation with where the implied vols are, and same kind of anticipation of catalyst moves like earnings. If we isolated that data, historical data, and looked how the stock behaved, on average, this spread at the end would be worth $2.75. It does all that calculation for us. So now we have a benchmark to compare it to. So selling it at 305 is above that benchmark, right? We don't know what will happen, obviously, March, because we don't know what will happen in the future. We could just look in the past as some guideline, right? Some base model. But there's different ways to try to calculate the benchmark, right? And we could also look at, well, they're also implied volatility. So what are the implied volatilities usually? And how did the implied volatilities between these two options compare to each other historically versus today? And this shows us a little bit of a different theoretical. This says it's 310, which is above the 305. And basically what this is saying is if we looked at a similar spread with similar days to expiration, similar general implied volatility regime, similar, we took out, if there's no earnings, we took out those earnings, and so the machine's going back and trying to figure out, which data first to use, and then it looks at the implied volatility of these options and says, okay, if I took historical implied volatilities, and plugged it into today, and then we took the average of all those observations, what on average would we are we looking at for this similar spread? And that's $3.10. So the 305, hitting the 305 would probably, and there's room for improvement, right? We see here, this is a pretty wide bid-ask spread. So to me, it looks like there's a lot of room for improvement if you're trying to, get that midpoint. Plus, it also tells you how liquid these markets are, because, if you're putting this spread on based on just this bid-ask spread I'm looking at, 305, 435, $1.25, there's a lot of information right here, just, looking through this. Well, that's not a very liquid bid-ask. That's shown that there could be illiquidity here, because if you have to get out, if you change your mind, or certain circumstances change, some news changes, the implied volatilities change, you find a better opportunity somewhere else that you want to reallocate your capital. Well, now you got to keep in mind that exiting this could be difficult too, right? Even if you get a 370 fill right in the mid-market, well, okay, but even exiting this strategy could be costly. I don't know if I'll get it in mid-market, and if I really need to exit and pay the fee to the dealers, it could be pretty costly. So what do we see here from the calculator? Well, really quickly, we see the liquidity of it, of the bid-ask spread. We quickly see what the payout diagram looks like at expiration. So we have now a sense of our potential risks and rewards, and where those risks and rewards are. And then we have some benchmarks here to reference really quickly. And then we could go in there, and if we wanted to change some of those assumptions, we can, number of years and so forth. So this, we'll be going over this in the Interactive Brokers webinar, so I'm not going to get too deep into it right now, especially if we work on moving these pieces just to make it easier. You know, it's going to look different. So maybe after we change it up, it'll, you know, we'll talk about it more and more. And like I said, there's a lot of features in here that we could start using by changing assumptions with implied volatility, interest rates. Maybe we want to, change the ratios and so forth. So we could start using that calculator for this. And if you add it to your watch list, again, yesterday we showed it, then you could just track this spread and see how it did, track the spread over time.
Nice job, D.
Okay. So guys, if there are no more questions, I might cut out earlier. I do have an appointment to go to right after, and if we're good with questions, we'll end it here.
One more. Well, actually, Jack. Well, we can get to any other questions tomorrow. I'll copy them down. Rick said he sent over to support a screenshot of what he's seen.
Okay.
With the storing of the data. Also, when is the IBKR webinar? It's the second Tuesday of every month, right, at 2 p.m.
Yes. Yeah. So we'll send more reminders. I mean, we're still a little bit far away from it. We do them once a month with Interactive Brokers. So this one is second Tuesday in March. And not next Tuesday. It'll have to be the following Tuesday. I don't remember the exact date. And we'll be going over, these features. So I think that, we'll save a more comprehensive overview of it for that webinar.
All right, perfect. And I'll put a link in the chat for the IBKR library that sits on their website of all the webinars you've done. I think you've done over 30 now. So
yeah,
that will be there. Anyone can go back and look at the old webinars and register on the site. They have all the webinars coming up listed. I don't know if they've put our next one up yet where you register on their site as well. So awesome job, D. You get to that appointment. We'll see everyone tomorrow. Thanks.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day and hope to